extreme levels down here at 150s, and some smaller ones are like 151, 152s. So upside, pre-market, you have some, potential upside to 160s over here. So you can see this thing has some really, really nice range. And also because it also gapped down already once last Friday from the earnings miss. So if you take a look, that definitely fits the criteria number 1 for overnight gap down to key support levels. Now, number 2, the catalyst was the entire market panic that we talked about. It wasn't anything specific to Amazon. Remember, the earnings miss was the week before. And number 3, the instrument needs to follow entire market. Amazon definitely is a big part of SPY as well as QQQ. Number 4, this one's very important. The instrument or the asset you're trading needs to have had multiple days of sell-off. So you can see Amazon was already selling off, a lot with multiple gap downs before this. It started selling off here, I think it's a Thursday after earnings. Next day, earnings miss. You can see a huge gap down from 184 down to 160s already. So that was already below that 200 SMA sell-off. And then that was a Friday. And then Monday, you can see even more gap down from 167s to opening at 150s. Okay, so now that you understand the setup strategy criteria and Amazon checked all the boxes, let's talk about entry criteria. I hope you're paying attention to this because I think this is an important clarification that I want to make sure you take away from this regarding this particular daily support dip buy strategy. This dip buying strategy is not to be confused with catching a falling knife. Catching a falling knife is when you see a candle fall and crashing through all the key levels and you try to catch it or get in on the position randomly with full size without waiting for any entry confirmations. That's not what we're doing here, and that's not what I recommend you to do. That's a recipe for blowing up your trading account. I've done this in the past before. Trust me, it's not fun. And so looking at actual intraday charts here, and you can see my actual execution charts on Amazon as well. Instead of trying to catch these random falling knives pre-market, you can see I waited until the market opened. So number 1, I waited for the price to consolidate and hold above these daily key levels. Remember, this could have fell off all the way to 150. So I didn't want to catch a falling knife. So instead of jumping in randomly, I waited for the stock to reclaim over the 155's daily support area. I watched it on the 5-minute over here and reclaiming over a VWAP indicator. That's another one I use to show strength and reclaim of key levels. So I waited for those things, VWAP reclaim, higher highs, higher lows, and you can see the bounce, once SSR was triggered after the market opens, that definitely helps on the long side as well. I generally use the 5-minute charts for a lot of these confirmations, like in the past few videos I've talked about. I know some people even use a 15-minute chart. For me, that's a little bit too slow, but it definitely helps. You can see on the 15-minute chart, you can see a very strong candle bouncing off the 155s, and the stock just trended up all day until about 11 and even into close. So here are some more examples of those daily support